Hey everyone, and thanks for jumping back into the Equityverse. Today, we're going to talk about Tesla, and we're going to be discussing theoretical Tesla market cycles. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I believe the last video we did on Tesla was when it was around 180, 190 or so. And for full disclosure, I do have a position in Tesla. I think that's important to say so that you understand what my bias is. But I do just want to go through some of the recent moves by Tesla and actually compare it to the last cycle. Okay? Because I think there's actually some similarities that can be found when you compare what's going on with Tesla today and what actually happened back over here. Now, they may look a lot different. But they were both fairly explosive moves, right? So if you were to take this move from the low in May of 2019 to the peak, it was about a 3,000% move. And if you take this move from this low to then that peak right there, it was about 1,800%. So this move, the second move, was obviously a lot more substantial, but still, you basically have this company that's obviously doing a lot of sort of paving the way essentially for the EV industry, getting a huge move up, followed by a long consolidation period, right? And you could argue that Tesla now is just in this long consolidation period. But where are we potentially in that consolidation period? And actually, if you look at the last consolidation period, it did involve new highs. Now, that might not sound like a consolidation period if they're going to new highs, but I'm talking about in sort of referring to before you get to another really explosive move, not just, slightly higher highs. I mean, this move over here was about a, 40% higher than the prior high. And of course, if Tesla were to go 40% higher than the prior high, I'm sure a lot of people would be happy. But I just want to talk a little bit about this cycle compared to last cycle. Now, a little bit of history with me and Tesla. I first became very bullish on Tesla back in 2013. So I essentially rode this wave for a long time. And then right around here, I started to get pretty skeptical of this move. And I did think we needed to go through a long consolidation period. I thought there would be quite a large sell-off. Now, I have made some mistakes. That is clear. I have made some mistakes. But at least in the last video, I sort of shifted my view and I said, look, guys, I do think long-term Tesla will go up. And so I just want to talk about what could we see happen over the next couple of years, right? So the first thing to maybe draw your attention to is there do seem to be some similarities between these two moves if you look qualitatively. What you'll notice is that last cycle there was this huge sell-off, right? You see that big sell-off followed by an immediate recovery back up. Very similar thing happened here, right? If you look, I mean, a huge sell-off followed by an immediate recovery back to the upside. Following that sell-off and recovery, Tesla then faded for a while, but ultimately it set a higher low compared to the capitulation, right? It set a higher low. And this is why I think I was tweeting about this when it was happening back when Tesla was, close to 140, 150. I said, look, guys, if you missed it over here at 100, which I did, admittedly, I missed it there, this is the time to, this is your chance, right, to get another go at it. We might visit that level again in the future. It is possible, and if it does play out like last cycle, we will visit it again. But if we do visit it, it could still be a long ways off. One of the interesting things about this move over here that happened by Tesla, you could argue that there were these series of lower highs, and then once we finally broke through those lower highs, we then back tested it as support along with the bull market support band. And then ultimately Tesla went to new all-time highs. Right after the fade, you get a big move up, a pullback, and then a larger explosive move to the upside, right? It's pretty clear. You can see that. Now, look at this one. Similar structure, right? Capitulation in the same way. Capitulation here, fade, fade, and then you get this rally up, okay? Now, the thing that has not yet happened is a pullback potentially to the bull market support band or close to it. Now, I do think that that probably will happen at some point. Do note, though, that last time that pullback didn't actually occur until Tesla took out the high that it had just come down from, right? So that would correspond essentially to this high here at close to $300. Now, there are some differences. This hasn't, while it does look similar, there are some differences between this move. And in fact, maybe if I just take a bar pattern, you could more easily observe what some of those differences are. So all I'm going to do here, we're just going to take a bar pattern from essentially that high all the way over and kind of compare it. And we know that there was more volatility this cycle, but you can kind of see the similarities, right? It's not an exact match, right? It's definitely not an exact match. And certainly this cycle has been taking longer to play out, as last cycle we would have already had the explosive move to new all-time highs. It would have occurred earlier this year, in fact, or last year. It would have started last year in September, October timeframe, going to new highs. So clearly it's a little bit different. We maybe could expand this out and look at it perhaps like that, if you see what I'm saying. Like that, where you essentially have, your highs, you come down to a low, you set this, you then bleed back down, and then you get moving here. It's possible that you do get a pullback, but maybe the pullback just ends up being to where we currently are. Now, one of the interesting things, though, about Tesla is going to also be, of course, like any other thing, it's going to be dependent on monetary policy, and it's also going to be dependent on if there is a recession or not, right? And I don't know the answer to that question. Clearly, if there were a recession, it would negatively impact Tesla, in my opinion, right? In my opinion, it would negatively impact Tesla. With that said, it's also impossible to predict exactly when something like that might occur, right? I don't know exactly when it would occur, but I as I was clear back over here and here, I think it makes sense to have some exposure, not financial ice, to Tesla for myself in case it does continue to play out like last cycle. I also think that even if it were to sell off and even if it were to make a new low, I would ultimately just treat that as an opportunity for Tesla. I think Tesla will go quite a bit higher in the years to come. It's just a matter of getting through a long consolidation period. If you look at this prior consolidation period, from when it first hit that all-time high, even though it took some of these highs out until really it started a more durable move up, it took about 272 weeks, right? Currently, we're only about 140 weeks in. What's interesting, 272 weeks would actually put you all the way out sort of near the end of 2026, early 2027. So you could have an example where you do come back down to this low, and it could be as far out as 2026. In fact, from this low here to that low before a more sustainable move higher was about 172 weeks. 172 weeks from this low out would actually put you all the way out in April of 2026. So I want people to recognize that with things like Tesla and you get these explosive moves higher, you can go sideways, you can even pop up to a new level for a while, hold that as resistance, go back down, and then test that prior level before actually taking off. And that's what I wonder. I wonder if that's what's going to happen again, because if you look at this, the main difference that I see, like the main difference that I see so far, because I'm always looking for how is it different. I don't think we should assume it's going to play out in the same way, but the main difference that I see is on this pullback here, Tesla was able to hold support at the previous spot it had held support. You see that? This time, though, the previous spots that it had held support, which was around 180 or so, we were unable to hold it, and it actually went lower, right? So it does look a little bit different than last cycle. One other thing that I think is worthwhile to consider, let's switch this over to a regular scale. Take a look at where Tesla went when it finally had that pullback so many years later. You can look at sort of these sort of lower highs here. And if we just connect the dots between, say, like this high to then the lower high, what you'll notice is that we broke out of it, tested it as support, went to new highs, and then ultimately we back tested that trend line about 2 years later, which would correspond to 2026. But that doesn't mean you couldn't go to new all-time highs first. In fact, when Tesla went to this all-time high, it rallied to the 1.618 fib. You see that? It rallied to the 1.618 fib. And then it still dropped back down to the same level it had gone to 2 years before, right around the time that the Fed started to cut rates. Now, I want you to keep that in mind, and then I want you to look at the current cycle. Look at the current cycle. Now, if you take this measure, if you take a fib retracement here, the 1.618 is actually at around $600, which would be more than a 2x move from the current prices if Tesla can repeat it. Again, there are some qualitative differences, but that doesn't mean it still can't go to the 1.618. In fact, the NASDAQ has already gone to the 1.618. The S&P, I believe, has gone to the 1.618. So, I mean, it is possible for Tesla to do the same. Now, I will say, though, if you look at a similar type of move, if you connect, say, some of these highs together and you extend it out, let's suppose it's playing out in a similar way as last cycle, where you break out, you back test it, you go to new all-time highs, and then a couple years later, you then test it as support before really taking off. What happens if it happens again? Like, what would that look like? What would that look like? Well, right now, we've already gone to the 0.5 fib. If we were to back test this, if we get a price label on here, it could correspond to the 0.3, this 0.382 fib at around $220. Right? So it could look something like this, where you go back down to it, test it as support, and then you go up. That's one example. If it were to play out like last cycle, it would actually go a little bit higher, up to around $300 before getting a pullback. But I think that is something to watch. But what's fascinating is that if you connect these dots, like last cycle, sort of these high to the lower high, to the lower high, to a lower high, if we do back test this trend line, kind of like we did last business cycle with Tesla, but it doesn't happen until, say, 2026, that would actually correspond to a lower low, right? It would just take another 2 years. Now, personally, I think it would be foolish to assume that that has to happen. For me, I've learned my lesson on Tesla back over here. Look, guys, I was bearish on Tesla at 400 and 300 and three, and all the way through here. My issue was that I did not flip bullish on it right here. And so what happened was we got this bounce, sort of ripped my face off, and we came back down, and over here I shifted my tune. I was like, look, guys, I was wrong. Rather than double down on this, let me just say, I want to, I got a position in Tesla. I have a position in Tesla, and whatever happens, I'll be there for it. And so that's essentially what I've done. I mean, I have a position in Tesla. I'm happy to see Tesla going up. My short-term concern would just be, maybe you come back down to this channel, this trend line, you test it out support before taking off. Another example, more of a long-term thing, could be, do you back test the trend line in 2026 at, potentially a slightly higher low? Do you go back to 140 in a couple of years? Or even do you put in a lower low courtesy of a recession? And I know like 4 years removed would sound kind of ridiculous, right? It's not like a lot of people here are making trades based on where it's going to be, or what could theoretically happen so many years from now. But if you look at, prior inflationary cycles, like in the 1970s, you'll see that there were definitely these cycles where after 4 years or so, you might even put in a lower low, right? This was 1966, this was 1970, and this was 1974. So you had examples where, yeah, 4 years later, the market did put in a lower low. So if something like that were to happen, then certainly it would negatively affect Tesla, right? But what's funny about these moves is that some of them also rallied up to the 1.618. Now, I think Tesla's biggest issue in the short term, as to whether it can actually go to new all-time highs or not, is if there is a slowdown in the economy, does it happen now, or does it happen, like 2 years from now or something? If it happens now, maybe you just ride the trend line down for a while until it's time to move up. Another point that I want to make is last cycle, if you were to look at interest rates, you will see that Tesla sold off just before rate cuts, right? You can see here it's been selling off, but then it started to go back up in anticipation of those rate cuts. It then had a pullback as those rate cuts arrived, and then it took off. So there does exist a scenario where all of this is not a valid comparison. Like maybe we're already there in terms of monetary policy. Again, if you look at monetary policy, this is sort of that period where Tesla was putting in slightly lower highs, right? You see that? You see these slightly lower highs, and then the Fed cut rates, and right after the Fed cut, the Fed cut in July, Tesla sold off 1 month before that. So there do exist scenarios, of course, where Tesla shows weakness going into rate cuts. But I think the main reason that last cycle Tesla shot up after rate cuts is because there wasn't a recession, right? There was no recession. And when it comes to rate cuts, the performance of risk assets coming out of rate cuts is very much dependent on if there is a recession or not. If the Fed is cutting in a panic way, like if they're panic cutting because the data looks really, really bad, that's obviously not a good thing, right? And then Tesla would likely go down. If the Fed is cutting sort of to preempt any bad, before any bad data comes in, like 2019, then it would be favorable for risk assets. So the way I think about it, for Tesla with me is I have exposure to Tesla, right? I do. And I said that a few months ago when I made the video when it was at like 180 or something. And I mean, I've had exposure to Tesla really for years and years and years. I did not, despite the fact that I did become bearish up here, I still held on to a significant portion of my Tesla position, So it's kind of one of those things where like I was cheering on this drop because I was greedy to get more. And then before I knew it, it was already well off the low. So then I took advantage of this drop to actually make sure I was on the right side of things in case it does go up. The way I would play it right now is I have some exposure to Tesla. If we do get a recession within the next 1 to 2 years, I do think it would negatively affect Tesla. If it were to play out like last cycle and we actually sort of go back, we sort of back test this lower high trend line, then it could mean revisiting, right? It could mean revisiting some lower levels in a couple years, right? Maybe going back down into the 100s at some point, right? There's also another way to draw this trend line, which would, be another interesting way to look at it. And that would be to look at it like this, right? So basically connect those dots instead of connecting it to here, connect it like this. And if you do it like that, you can see that we've been testing this trend line right here, right? We've been testing it. So that's why I'm not entirely sure if we're here or if we're kind of like right here. And even though we might be right here, there still is a chance that it could play out differently than last cycle if there's actually a recession. Remember, no recession here. We don't know yet what this is going to be. We still have an inverted yield curve. If you're looking at the unemployment rate, it is still going higher. So back over here during this move by Tesla, during this consolidation period, the unemployment rate was going down. During this one, the unemployment rate is, slowly going up. So that's something that I constantly keep in the back of my mind. I'm like, well, what if it is different from the last business cycle, and what if it does play out in a slightly different way? I think for me, I think where I've sort of come to terms with this is that, I think long term Tesla is a good play. I think it's possible that if there is a recession, it could go down to lower prices. Worst case, it could be a slightly lower low, right? Worst case scenario, you could have a slightly lower low. But I also think there's more to life than worrying about whether that's going to happen or not. And for me, I'd rather just, look at Tesla, see what they're doing. Fundamentally, I do think long term the company will be successful. I just think we're in a long consolidation phase right now that could lead to new highs, but still not see an explosive rally like this one for a while. I think one of the reasons why you might not see, and again, when I say this, you could still see Tesla at $600 and it still fall into what I'm talking about, right? Because that the $600 would be the 1.618. Where I am is, if this is just a long consolidation period, kind of like this one lasted from 2013 until 2019. So it lasted 6 years. This one started in 2020, and it's already been 4 years. So what I'm suggesting, right? What I'm suggesting is that we might have a scenario where you get 2 more years of consolidation, where the definition of that consolidation could still involve higher prices. It's just I don't know if you're actually going to get, I don't think you're going to get explosive move like this for a while. That doesn't mean you can't come up here, right? Sort of a similar spot as where we went back there. You could go to that level. But I don't think you're going to get that extreme explosive move until a little bit later. And one of the reasons for that, I think, is because there's going to be some concerns, about monetary policy and about inflation. And the issue with inflation is that it just takes a long time to bring back down, right? It takes a long time. And so because of that, while I think it's possible that Tesla could go as high as $600, right? I think it could go as high as $600 at some point in the next year or two. I also would argue that it likely isn't going to be going to, say, $1,000 immediately, right? $600 is possible. An explosive move to like $1,000 to $2,000, I think, is going to be several years away. Maybe 2027, 2028 timeframe. But for me, I kind of feel about it the same way that I did in 2013. And that's just, what? I don't know how long this is going to take. It's probably going to take longer than a lot of us want. But that's the reality. And another way to look at this is maybe just to connect the dots on the lows, right? If you look at sort of this longer term trend here. So what we're going to do is we're just going to connect these dots and say, all right, well, what happens if it just has to retrace to this point before it gets another durable move to new highs? If you take the prior low at around 100, that would take you until about the end of 2026 or early 2027. Remember, this low here was put in early 2023, so that would be about 4 years later. That'd be about 4 years later. We're already, a year and a half in. Right? We're already a year and a half into that. So I think, I think the case is clear if you're a Tesla, if you're a Tesla bull, if you believe in the long-term business model of Tesla, then you have your range, right? You have your long-term range here, and then the question is like, how long does it take before you get another impulsive move up that's more than just a slightly higher high? And maybe it does take until 2027, but a lot can happen between now and then. Remember this, to pull this up again, this fib retracement, last cycle Tesla did go to the 1.618, right? And so if it were to go there, that would be around $600. That would be a hard move, I think, for a lot of people if it went to the 1.618 and kind of hung around there for a while, and then at the end of 2026 came back down, and then we went up. That would essentially be what happened last business cycle for Tesla. That's what would have happened. So, but I think this is the issue. You know, if Tesla follows this path, then for me it makes sense to have exposure now, right? Because I don't want to like hope that it comes back down here. I'd rather just have some, and if it goes up, know that it could go back down there, but not hope for it. If I had nothing and if it went up here, then I'd just be constantly worried, is it going to drop back down here? This way, I don't really care so much. Now, if we assume that it has to go back to the trend line, which probably is a stupid assumption to begin with, but if we did, just to put some price labels on it, you can see kind of where that would be and how long where that would correspond to. It's probably a silly assumption, though. These trend lines are kind of useless, I think, for the most part. The other thing to look at is we got some Tesla metrics. Here's the running 1-year ROI of Tesla. It's actually still below 1. It does still look kind of similar, right? I mean, it looks pretty similar to this, right? You can see a huge move up, kind of like this one, right? And then you go down, and it kind of just looks the same, right? It really does look very, very similar, and it's just a larger version of it, right? It seems like a larger version of what we previously saw. If we were to go look at the monthly returns for Tesla, you can see that it hasn't really been doing that great in a while. Like, there's been a lot of red months. If you were to look at year-to-date ROI of Tesla in 2024 and you compare it to 2020, you can see it's underperforming 2020 by a lot. 2016, though, it's right where it was, right? So, if it were to follow 2016, it could fade, right? It could maybe fade back down to 220, 200, something like that before getting another push higher. Here's what it looked like in 2012. So these are all election years. And in these cases, this is, it basically just sort of trailed off until about the fourth quarter of the year. But so far this year, Tesla is basically right where it started the year, right around 1. Right, so it essentially went back to its yearly open. It's just between its yearly open and where it is now, it dropped down about 40%. So hopefully, if you've been following this stuff, you were able to pick some Tesla up below $200. If we go sub 200 again, then I would expect it to be a good opportunity. Kind of similar to to sort of these opportunities over here. That one and that one and that one. So I think we've kind of put into those lows already. There might be a third low at some point. And maybe it'll come before. Maybe instead of 2026, maybe it just comes in 2024. That's always a possibility. It's possible that you just come back down, double bottom, and then go up, right? Every cycle is going to be different. I remind myself of this constantly. I can't look at this stuff and assume it's going to play out the same way, because every time I do that, it ends up not, right? It ends up playing out in a different way. And I think too, just kind of viewing it in terms of monetary policy is useful, right? You can see pretty clearly where Tesla started to take off again. It's when rate cuts arrived, and we know that rate cuts are likely going to be coming this year. At least the markets are saying, there's only about a 2% chance right now that they don't cut by September. So there's that. I think one thing, though, with regards to, to Tesla that might be a little bit perplexing is that the S&P, like Tesla, is not at the 1.618, where the S&P is already there. And I think the main risk for Tesla is if the S&P were to have a larger sell-off because it's at the 1.618, like if you look at just the last couple of business cycles, right? If you look at sort of the 2018 move, you can see it rallied up to the 1.618 before having a sell off. If you go back over here to that 2014 to the 2016 cycle, right, it rallied to the 1.618 before having a sell off. So like because we're at the 1.618, that I think is going to be the bigger risk for Tesla, because Tesla's not even there, right, at this point. And if you look at like over here in 2013, if you overlay Tesla, let's overlay Tesla with the S&P and see if it was how correlated it was back then. If you overlay Tesla over here with this move, right, you can see that Tesla came up, and then in the election year, right, in 2016, that's where, you know, it did have a pretty big sell-off right there when the S&P did. So there has to be some correlation there, right? There has to be some correlation. So if the S&P were to sell off, then it would negatively impact Tesla, and therefore, you know, a rally to $600 might be delayed another year or two, right? Because, you know, ideally Tesla would have already gone to $600 because that's the 1.618 fib retracement, and that's where the S&P already is, right? So I think that's kind of where I am right now with Tesla. And if it all seems somewhat confusing and like I'm talking in circles, let me clarify. I think Tesla long term will go higher. I do. I do believe in the long term success of the company. I also think that Elon Musk is going to do a good job running that company. I think he's proven that over and over again. One of the things I've said before is when you bet on companies, you bet on people, you know, and I know a lot of money, or I know a lot of people have lost a lot of money betting against Elon Musk, right? So I think right now my sort of thought process on Tesla is that we're just in a long consolidation phase that could lead to new highs if the S&P behaves, right? I think that in order to get another explosive rally up, you're going to need to see inflation go away. And when I say explosive rally, I'm talking about, you know, four figures, right? Where you're actually out of the 200s. I think in order to see something like that, we're going to need to get inflation under control. I think the upside for the next year or so might be capped around 600. That's sort of the optimistic scenario for the next year or two. But if you're talking about 5 to 10 years out, then who knows, right? I mean, it certainly could go a lot higher. Those are my view on the market as it relates to Tesla. Long-term consolidation right now, kind of like 2013 to 2019. And I would say just take advantage of these dips when they come. Hard to know exactly when they're going to come, but that's what I would think. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. We'll see you guys next time. Bye.